Welcome back to The Explainer. Today, we're going to challenge something you probably think is a golden rule of investing. See, it might not be about when you invest, but why you invest. And getting that one thing right, well, it could totally change how you see the markets.
All right, let's jump right in with this really powerful idea from our source material. What if the way most of us invest, buying something and just hoping its price goes up, what if that's really just a fancy way of gambling? I know, it's a bold thing to say, but it really gets to the core of what we're talking about today.
So, for most of us, right, the investing playbook, it's pretty standard. We're all kind of handed this same strategy, and it really leans on one thing. The market has to go up. It's basically a game of hope. I mean, think about it, right? We put our money into our 401ks, into mutual funds, we buy stocks, maybe some real estate, and the whole goal, the entire game, is built around this idea of buy low, sell high. We're just betting on appreciation, hoping that down the road, someone somewhere is going to pay more for our stuff than we did. But, here's the catch with a strategy that's just based on hope. Sometimes the market just doesn't play along. I mean, the data is pretty clear on this. It is absolutely possible for the big markets to just go sideways for a decade, a whole decade. You can do everything you're supposed to do and still end up with a portfolio that's basically gone nowhere.
Okay, so this brings us to a huge turning point. The sources we're looking at suggest that we've been asking the wrong question. Instead of asking, what should I buy, we need to be asking a much, much better question. Why am I buying this? Is it for some potential payday in the future, or is it for the income it can give me right now?
So, investing for capital gains. That's exactly what we've been talking about. It's all about appreciation. You buy a stock, a house, whatever, and your profit, it only becomes real when you sell it for more than you paid. Until that moment, it's all just numbers on a screen, paper gains. Now, investing for cash flow. This is a totally different ballgame. This is all about getting assets that act more like a little business, something that puts actual money into your pocket regularly. We're talking rent, dividends, that kind of thing. Yeah, this slide really lays it all out, doesn't it? What's so fascinating here is the huge mental shift it represents. On one side, you've got speculation, just crossing your fingers that the price goes up. But on the other side, you've got a real business strategy. You're building a portfolio that's designed to generate income. It's the difference between hoping and building. So let's dig into this cash flow idea a little bit more and see why it can be such a massive game changer for an investor. See, when you're focused on the income an asset spits out, you're suddenly way less vulnerable to the day-to-day craziness of the market. And on top of that, as our sources point out, this whole approach comes with some pretty sweet perks, like major tax advantages from things like depreciation, and it lets you use leverage in a much smarter way. When you boil it all down, the concept is just incredibly simple but so powerful. You're not just owning an asset, you're owning a little business that pays you. It doesn't matter if it's a rental house, a stock that pays dividends, or an actual business, the goal is always the same. Get paid while you own it. Okay, and this is where the cash flow strategy really starts to blow your mind. It lets you do something that seems totally impossible to a regular investor. You can actually make money when the market is tanking. Let's take an example straight from the source material. Imagine the housing market is in a total slump. Prices are dropping everywhere, and on paper, the value of your rental property is going down, down, down.
Now, for an investor who's just playing the capital gains game, this is a nightmare, right? But for a cash flow investor, it doesn't matter nearly as much. And why is that? Because every single month, like clockwork, your tenant is still paying you rent. That's real, cold, hard cash flowing into your bank account, no matter what the so-called market value is doing. And this just nails the point home, doesn't it? Over a year, you could pocket, say, $6,000 in actual cash income from that house. Your bank account is going up, even while the real estate market is going down. You've completely disconnected your income from market speculation. And you know what? This same idea can be applied to the stock market using tools like options. Think about it like this. Like putting a super expensive suit on layaway. You pay a tiny fee to lock in today's price, right? You're buying the right to purchase it later. You don't actually own the suit yet, just the contract. Now, if the value of that suit suddenly skyrockets, you can sell your layaway contract for a massive profit without ever having to buy the suit. And because your initial investment was so small compared to what you made, well, your return on that tiny investment can be huge. We're talking In theory, an infinite return. All right, so let's look at how this approach really creates a completely different kind of investor, what our sources call a sophisticated investor. This right here, this is the million-dollar question. A truly sophisticated investor isn't obsessed with how high a price might go someday. No, they're obsessed with the return of their investment. How fast is the cash flow from this thing? Pay me back what I put in. Because once they get their initial money back, they basically own an asset for free that just keeps on producing income. So, what's the big takeaway here? It's this: real financial control doesn't come from hope, it comes from building a strategy. By focusing on buying things that actually generate cash flow, an educated investor can create chances to make money no matter what the market is doing, whether it's going up, down, or just sideways. And that really leaves us with one last big question to think about for your own journey. Is your strategy just based on crossing your fingers and hoping for the best? Or are you actively building an engine, a machine that's designed to pump out income month after month, year after year? The choice is yours.